Okay, I'm all caught up with the messages. Pretty violent bounce, and we usually get it. Now, what they do with the underbelly of what they lost is the question. If we zoomed out, you will see that we did the same thing yesterday. We gapped down and we filled the gap, and then we gapped down again and we filled the gap. So, are we now selling rallies? I wouldn't categorize it as that, but that's what's been happening for the last 2 days. So, to be safe as a bull, I would assume that that would continue to happen again until they change their mind. Now, tomorrow we have a binary event. Luckily, it's not at the open. So we will be actually trading it as opposed to waking up to a gap down or up like with a report. So 561 to 563 should present an area of resistance. Therefore, starting calls for no reason is not very smart. Now, Tom has been long from a little bit earlier in time. So it wasn't a perfect entry point, but he had a reason to be long using the futures because he's chasing a chart set up on a higher time frame that has a target for him. It is fast. It's just as fast as the drop. So yes, it is a sharp wedge. It is not blinding. We've seen faster. Let's put it this way. The VIX is 25, so everything should be fast and big because the VIX is 25. We still have a gap to cover. Yesterday they did cover it, I believe. I don't need to go back. So I respect the ability to cover. Um, you heard me vocalizing yesterday how bullish you guys were in here, and it was stressing me out that everybody flipped the switch bullish like this. So today, less bullish. The sentiment in here, profits in hand, the earnings trades worked out, the range worked out, the credit put spreads worked out yesterday, even the credit call spreads. The credit put spreads are working out today. We closed the credit call spread from like 6 days ago for today's expiration. I closed it 5 cents. Happy to pay it. So somebody's asked me, what do you think about GLD? I'm shocked that that person is asking that. It's the same person with the Berkshire Hathaway thing from yesterday. I'm not so shocked that people are doing it, but him, because he's been with me for a long time. So the comment was, this thing looks pretty high, but it looks like it doesn't want to stop, insinuating that he wants to go long. So that's fine if he's Ryan, who is a momentum trader, but he isn't. He is an investor. So this is where that investor sentiment should leave your body. If you're a short term, not a short term, if you're a slow pace trader, if you prefer slower swing trades, not necessarily investing for a million years, even for a few weeks and a few months, you should be able to look at something that's runaway rally and let it go. You missed the entry versus the oh, look at it break out and let me jump in. That is not you. Make sure it is you. And how do you know? If you don't get in and out of a trade in the same day ever, that is not you. I guarantee it. So if you're okay popping in and out, then it could be you. Gold, I would rather short it than go long it. In fact, I closed my bearish position for a green. I can reopen the same one now, probably, and as a bear. I'm just shorting the chart. Here's a question in private. NVIDIA 60 put to own shares, October 6K, followed you from Benzinga. Hey, thanks, Tom. Great chat room. Yes, considering Discord, of course. Learning a ton. Help you not lose money. I'll chicken out of the NVIDIA trade. Okay, so it's not chickening out. Are you telling me you made 6,000 on the trade? How is that chickening out? You're just leaving some money on the table. I sold the same put. I can close it today. In fact, I closed the ARM trade. I paid $100 to get out of the trade. Okay, so I don't know what that 6K number is. You sold 20 contracts? Or 15? Hi, Neve. Okay, first I shorted BKK with puts and locked them in on the correction. Then on this rally. So somebody's pushing back. Okay, so if you twist my arm on gold, I would restart my short by selling a call spread, which I still have, and buying a debit put spread, which I don't have. I closed it for a win. I'm not doing that. because it tells me from your comments here today, there's a thesis going around that, oh, gold should rally because it's a weak dollar. I don't want to argue with silliness, so I'll let them have their silliness and I'll give it a few days and I'll reevaluate. Besides, I'm already short through a credit call spread that is winning. All right, so today, most of the stocks that are on my list are red, which is fine. My account is very green because of some of the shorts that I placed. Kroger and KO. Kroger back to green. McDonald's back to green. This is insane. I cannot believe that the market is this dumb. They pile into safety trades like McDonald's, Kroger, and luckily Coca-Cola today is not green yet. And Coca-Cola. I don't get it. I honestly don't get it. How can they convince somebody with millions of dollars to do that move? Anyway, it's working for now, though. You can't argue with it. So I'm short these stocks, and I'm not getting out. This morning, they had greens. So I don't need to change anything. So Kroger is red. I did not add. It's July puts and shorter call spread, which is still working. Coca-Cola is flat, was green earlier today. So I'll see what happens with Kroger. I have not added. I don't have any new information. The stock is still at all-time highs under precarious conditions. Technically speaking, a very sharp rising wedge is not ideal. If you want to see it, I'll give you a quick look on Kroger. I can't believe I'm trading Kroger. I mean, what is going on? What the hell is this kind of ramp on a P&L this boring? That's why I'm short Kroger. Deteriorating sales on a quarterly basis, flat top on a yearly basis, not a lot of profits, not great margins, not an exciting business, and it's in the stratosphere. Yet Nvidia worth trillions of dollars, growing hand over fist, quadrupling its income and sales quarter over quarter. It can barely hold on to 100. What is going on? So this is going to have one of these things at some point, and I want to be holding puts for it if I can. So I took a short by starting a position. I have not added to it. It is red. I added by selling a call spread, which is working, that part. So I may add to the credit call spread as opposed to add to the puts first. But I want to be holding puts if the stock breaks down. And in fact, I extended the thesis to say, for as long as they are buying Kroger while they're selling Nvidia, the stock market has not bottomed. The logic there that I'm using is they're still hoping that we're going to set an all-time high, which is why they would hold on to Kroger, because it is at an all-time high. So they're saying, let me hide in Kroger, which is still at an all-time high, while Nvidia comes back and hits an all-time high. So we haven't bottomed. We bottom when there's capitulation, right? When everybody gives up on everything. That's the bottom. We're not even close. What we had everybody got spooked for like 5 minutes. And we fell at an incredible pace. And then said, oh, wait a minute. No, that was nothing. I thought I heard something. What month? I'm short via July on the puts. Don't buy my puts. They're lower. I would buy puts at the money right now if I was starting it now. And if I wanted to put $500 into the trade, I would only put $200 today. And I wouldn't add until I decide whether I want to give up on it or double it down on it when it's down. I don't usually add to my problem unless I get new information. All right, just to make sure that everybody gets the news. I am out of the Palantir short from last night. It was a good win, 45%. The reason why I closed it, because it was a suboptimal setup. Remember, I mentioned yesterday, I don't like this setup because I paid $800 for a $500 wide spread. It was a diagonal. So immediately at the open, when the frenzy was going on, I threw a trade to close it, and it filled. And now it's less profitable. And if the bell rings right now, I would lose 300 on that spread. The credit call spread, I don't remember. Let me go check. October, 85. The way out there. All right, here comes the push to get into the empty space from overnight. Now, overnight, it's not empty space if you look at the futures. Like here, it looks like a gap, but if you look on the futures, we have lines. They cover the gap for me on the futures. A pivotal spot is 5653. And the highest point of volume so far today is 5659, 5859. So 5653, which is $6 above here. So 0.6 SPY above here through 1.1 SPY. 0.6, so 561.6 through 562.3 is an area of contention on the ES. So if I were to put a circle around it, oh, okay, you remember this guy? Yeah, that was important yesterday. This place means something for the futures. I'm estimating, I'm extrapolating by looking at the futures contract and trying to put it in SPY terms. So the score is red. The bulls are not in charge. We are buying dips, higher highs, higher lows since the 650 mark. So 20 minutes into the open, the bears have been in charge. The scoreboard is minus 1% was. The bears are in charge. Sorry, the bulls are in charge because we are on a trajectory that displays higher highs and higher lows. So they're buying dips. If you just look at 20 minutes after the open until now, red mark, bulls in charge. Look at the XLF, for example. I'm going to isolate it on the bottom right. It's a heavyweight in the S&P. If I go to 15 minutes, you will see how it had a huge pop yesterday, aggressive, in spite of Berkshire being down, and then a big drop, and now they're recovering half. So I wonder if they're going to repeat that path again. So have these. This is not a scallop. It's just like a very short candy cane. Anyway, they're coming into the middle part of the drop, which is a natural resting spot if you believe in Fibonacci ratios. The zone of the middle, the golden zone. We'll see. The XLV shows no friskiness like this one. So they're not all the same. So something's going on with healthcare. Did we have a headline from the government on healthcare companies? XLY. XLY is also trying to recover. So Amazon is a big part of the XLY and it's coming up. Tesla is another big part of the XLY. XLK, that's tech, bouncing nicely. XLC, very nice. XLB, materials, not so much, but it's still frisky. XLP, staples, the group I hate. That's Pepsi and company. Coca-Cola and all of those. Who am I missing? SHB, home builders. What is going on here? What is this? Holy moly. Look at home builders. What is this? Are you kidding me? Did a home builder report earnings? A big company report earnings here? Whoa. What is this? This doesn't happen often. It's worth investigating. Let's see here. XHBZ. No, YComp. I thought I fixed that. I didn't fix it. Carlyle. No, there's not one company that's large in the XHB. So I don't know who did it. I would not be holding calls in this area, by the way, with confidence on the SPY. Maybe CSL? I don't know. Something weird happened with that. I'm going to put the XLF here on the bottom right-hand corner, 5-minute chart. Let's see how the XLF can behave. Is this a good time to roll or close the SPX put spread? 100 in profit. Roll or close? You mean roll up? You want to lock your profits and open another one higher? You can, if you trust them. You can. Smart, Bonnie. So this morning we opened the credit put spread. Give it a minute though. So if you're going to roll it up, throw a credit call spread too. That would be my idea. So this morning we sold a put spread on the dip and somebody made money and they're asking if they should book the profit and open it higher. That would be inviting drama. I sometimes like it to keep it simple. If I hit my target on profits, I would say, you know what? I finished early today. Now, to complicate matters, you can close it and open one higher, meaning you give back some money to collect some more money. In that case, you might want to open a credit call spread as well. So let's say you got $100, you said, from the credit put spread the first time. You try to make 50 from a new credit put spread and another 50 from a credit call spread. So now you would have $200 in profits, potentially, in a self-hedged trade that could lose you 300. So 2 to 3, that's a pretty good reward to risk. But it's dramatic. So you have to babysit it for the rest of the day. If your schedule does not allow you to babysit those things, do not roll. If you're in a put, that's fine. You should have a buyer at 559.80, 559.80. So I'm going to move this blue circle and put it right here. These are fast trading comments. We're on a 15-second chart. We still have a gap up there. You should keep it in mind. Here, this is more fair in the middle. So if you remember yesterday, this yellow squiggly mark up top was a problem. They overcame it, and then it became a mile away support, and then they sliced through it overnight, and now it's a problem again. So the old bull still thinks it's the old bull when in fact it isn't. Yesterday, the mindset was the old bull, but they couldn't. It's like an older person still thinking they can do backflips. Hi, Carrie. Are you like as you instead of Aaron? Yeah, of course. Look at you, you're so nice. Might swoosh a bit. What is swoosh? Swoosh up or down? Swoosh looks like a Nike. Down a couple of points. That's not swooshing. Swishing to me is swish. Is that what you mean? Yeah. So here's what the deal is. They're trying to consolidate above this area. So a couple of comments. If I only, let's see here. Let me zoom back out. You remember this? Let's pull it up and see what it is right now. That made us money yesterday. Trady ticks. If you're in the Discord, you can pull it up. Go practice pulling it up. Whoa. Big money this week. $29 million transacting on June 20th at 550. Bought, put, sold call combination on the SPY. We don't have divergence. And let me explain. This is a pretty good concept. People don't get it. This is a perfect picture for me to explain it to you while we wait for this price action here. Okay, so this is what they call an algo flow. If you're looking at it, you see there's distance between the two. Most everybody says, oh, we have divergence. Incorrect. Those two lines don't have the same axis. The top line, the price line, the axis is on the left. It starts here at 557. It ends at 565, it looks like. If you change that scale, the placement of the line will change, but it won't change the values. Therefore, the distance will change. It's not about the distance. It's about how they're going in directions. Like, you see how they're going together? If they were miles apart, they're still going together, up or down. Like here, pop and drop, now sideways. They're going together. Yesterday, one was heading down, one was heading up. The distance wasn't the case because here the scale is from, looks like -10 to +5, +6. If I make the scale -6, not -10, these two will be on top of each other. Just to explain it. So if you get that these are not divergent, they're just going along the same path. Sideways, pop and drop, sideways, pop and drop to a degree. They're not divergent. Also yesterday, the algo flow actually crossed the zero line. So that itself is bearish. Okay, I don't trade that fast. Like you guys are pretty fast. This was, speaking of one candle, I guess we can put a line on it, but we have a circle. So this circle matches up with the top of this candle. This jaunt is important. And that's what they're trying to establish as support. If they hover here, now they can go like this and tackle higher highs. Okay, so it's important for them to stay above these squigglies, above the circle. Stay 516 plus first strike. Okay, somebody's asking about MasterCard specifically. I wouldn't mind being short Microsoft. I mean, MasterCard, as long as it's below 572. But I wouldn't want to hold short-term puts for it. I would rather sell a call spread, buy a put spread that has about a month on the clock. So if I have a put that's running out of time, I would want to spread it somehow. Sell a put for this week to stay in it, or close it and reset a short through credit call spread, debit put spread. So if the market rebounds, MasterCard should also rebound. It's a strong company. So holding a short-dated put for no reason for a short-dated drop is too much gambling. I am streaming on YouTube. If you want to go support the channel, pop in and say hi and leave. You don't have to. This way I'll see if I can get traction on its own. I have 7,000 subscribers over there. We do. But there's no way to reach them. Like, I wish Google will allow you to reach them like 3 times a year by saying, hey, you might want to check us out. We remodeled something. I mean, what? Why wouldn't they do that? All right. Questions. Anybody wants to learn anything today? Let's do some learning. Oh, link. Yeah, that would be good, right? Little detail. What? Can't you read my mind? What is annoying? Reach them with the titles of my video. Yeah, but they don't get the announcement of the videos if they don't have the bell thing on. So I can push a video out. They don't get notified of it unless they said notify me. And I think statistically, only a small fraction of the people who subscribe to channels actually hit the bell. Hi, Lori. Do Google Shorts? Yeah, I tried. Very difficult. Hi. Berta. YouTube? Very easy. YouTube.com / guess what? What would it be? / Simple Stocks. This is a link to right now video. Complicated stocks, yes. Terribly complicated. Now, there's an opportunity for the bulls here. A little flag, a little consolidation, chop, 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 chop. You break out, you're going to get to that yellow slash, which means you fill the gap. And then what? I asked that yesterday about the QQQ. I said, and then what? Then they topped for the day. Now, this is exactly a replay of yesterday so far, even with the VIX. The VIX dropped halfway yesterday and then collapsed into the bottom and then stabilized. So the only difference today that I could speculate happens with the VIX is that we do have an event tomorrow. So maybe the VIX doesn't get demolished. Maybe. It does have a gap halfway through yesterday after the close. Somehow, yesterday after the close, the VIX gapped up after the hours. What is going on? Where is this jitteriness coming from? 5657. Well, I gave you 52 as an important line. I think it was. Let me double check that. 52. Yeah, I know. ES 5652. I think is more important than 57. Correct. But I'm giving you a line that I see in spite of the harmonic. 52 from the overnight action, not from today's action. 57 is the highest point of volume on the ES. Yeah, I know. And I'm expounding on your sharing. But it sounds like you got that handled, so I will stuff it. Hi, Larry. Okay. Let's see here. Any questions on any of the earnings? Let's revisit. Palantir, I'm out. Vulnerable, it's going there. Ford, we didn't trade. Roku wasn't yesterday. Datadog, okay, so let's see the Datadog trade. The Datadog trade made $320 out of a risk of $300. High five yourself, close it, and move on. Hymns. Whoa. At the open, you made money. After the open, you did not make money. Okay. I said it was perfect. That was incorrect because I hadn't seen it gap up like that. So I take that back on hymns. Did not lose money though, because it's Monday. So you didn't lose money on the hymns, but you didn't make money. I thought it was right in the middle, but it wasn't. CELH is right in the middle. That one made $120, $130 out of a risk of $130. You made 100% on your risk on this one. Not bad. Palantir, if you close it at the open, you made money. Right now, you made $40. Even right now, it's still making $40. So you made hundreds at the open. You can still make 40. Close it and move on. If the bell rings right now, you will take max loss on this one, which is $500. Don't do that. Close it. Hopefully you understand. All winners, close them. So if you keep the trades open, an iron butterfly, you're going to get assigned something the closer you get to Friday because you are short something that's in the money almost always. All right, let's see if we can find another run. Something that's sustainable. I would not be in what ticker is this? The NQ. On the QQQ, they're vulnerable up here, the Qs. So these are the bulk of the Qs. Those are the mega caps up here. So if we put the Qs down on the bottom right, on the 5-minute chart, you should see, that's a faster trade. Okay, 1 second. Target 1 is met. 482 is doable on the Qs. So 40 cents of downside. It doesn't sound like much, but if you're holding a short, that's your target 1, 482 right there on the yellow line, which means if you're holding a call, that's your immediate risk. 481.90 to be exact is a potential. Now on a higher time frame, you should be able to find footing here to make a better recovery after the dip overnight. Okay, so the immediate drop is to 481.90. But if the bulls are really serious about the recovery, they should be able to buy it and then make a higher high. I don't trust them. This is a stupid market, very emotional. Don't trust them. Uber earnings. Lori, we'll check it later in the day. The earnings data is best checked at the end of the day because we will capture as much options activity as possible. That's where we get our clues. We'll check like where the calls have been transacting, where the puts transacting, and then we'll act accordingly. Well, I don't think we should slice through the highs. Here's the 481.90 on the Qs came to fruition, this one. Let's see how much more they want of that. Now they have a bounce level that is through 481.6 and 81.45. So 81.6 and 81.45. We have all these wicks they can lean on. Let's see here. The 50% mark is somewhere around 480 and a half. Which 50%? The rally from the bottom to the top. So when the stock goes from point A, the low of the day, to point B, this top we just went to. If you go to the blue circle or lower, it's normal price action, right? So the same concept is on the QQQ on the bottom right. Soldiers in the QQQ, it's this box. Soldiers in the SPY, it's this box and that one. Gamma is okay here. Options, $2 of downside pressure on Qs and SPYs. IWM is fine where it's at, maybe $1. Dasha, thank you. I made good money on RE data. Okay, Datadog, Hymns, and Palantir this morning. Okay, good job on earnings. Okay, nice. Yes, the earnings trades were great. In case you missed it, I'm no longer short Palantir. I could reshort the spike, but my setup was not well thought of because I took the trade and then I realized that the earnings were there. So I structured it in a way where the put diagonal was suboptimal. It would have been optimal in a quiet week, but not on an earnings week. Luckily, I did manage to make money out of it. Now I'm looking at crypto to see if it seconds the spike in the VIX. On rallies in the VIX, I would expect that crypto loses a bid. If indeed market makers are scared, the fear should be global. So that we should lose bids for Bitcoin and company. Yeah, that's good. Good job. Yep. A few hundred. I have a small account. It's a very exciting day. I have a small account that I opened at Tasty Trade, and it's about to turn growed up. It's at 14,975. If you know, 15 is a milestone, and 25 would be the better milestone. But this is a portfolio that just does small base hits here and there. Something boring, something that anybody could do. Um, very excited. If you're on the Discord, I have a channel streaming Bookmap. If you trade fast, you need Bookmap. It's streaming. I'm streaming 2 S&P and 2 Nasdaq windows, SPY and ES, QQQ and NQ. I also added a couple windows for options data. Now I'm still trying to see how reliable are the fuchsia colors or magenta colors. The QQQ shows downside pressure. They do adjust, especially the QQQ. It just jumps around a lot, so you have to watch it. But it also shows some downside pressure from the options. Let me see how consistent that is with me. Yeah, $2 on the SPY, about $1.50 on the QQQ. The IWM, it is in balance. Maybe $1 downside. Maybe. I don't see it in my calculation, but I see it in my bar representation on my desktop. So anyway, hopefully you start watching it and you start seeing if it's telling you anything. No, they are not part of the Bookmap, Jack. That's a home concoction. I borrowed somebody else's logic and I changed it. I even made it to put regular stocks for the earnings. So if you see, Palantir had a magenta bar at 130. Look at where it went. Poink. That was last night. This one had a magenta bar at 110. They went higher than 110. But they are at the 108. Where was the balance? Yeah, never mind. Who is this? Hims had a magenta bar at, looks like 45. They're at 45. CELH. Oh, I can't read the numbers. 37. They went to 36, 35 and a half. We'll see. This is a question that is not about stocks, but if you get time, I'm wondering how you were able to get the volume bar on your chart to the left. I had a training call with Thinkorswim and they did not know how to do it. Oh, on Thinkorswim? I got you. Okay, so I use TPO profile is the study. And I make a few changes. Let me see if I can find them for you. TPO profile on Thinkorswim is the study, and I make these 3 changes. You will get mine. Really handy. Amazing. It works well for anything that's but a daily chart, you know. You're welcome. Yeah, feel free to share it with whoever you want. I live and die by those charts on Thinkorswim. That's all I look at. Yes. The study is called TPO. TPO. Yes. All right. If you're on YouTube and you're not a member, consider becoming one. Simplestocks.com and ask questions. That's what we do all day. So today is kind of a quiet day because we fell off a cliff, we bounced hard, and now we stabilized. So we're waiting for directions. You can be long if you are trading higher time frame charts. You can be short if you are trading slightly shorter time frame charts. Neither of those two have good conviction. The only thing that's working is selling risk. The credit put spreads yesterday in the morning, credit call spreads in the afternoon. Today, credit put spreads have worked. Credit call spreads, you can send one out if you want. Let me see if I can give it to you. But if you've won already and you don't want drama, leave it alone. 50. Well, they're not paying a lot. 56.65, 5665. I don't trust that. Way too close to current price. But that should tell you that they're not pricing the calls a lot. So maybe you shouldn't be holding calls naked. The mega caps on the upper right hand corner are almost closing the gap. I'm going to put myself on mute. I will be right back. All right, nice push up there. Gap closed on the mega caps. The easy work is done. Next move should be 560 and a half, as long as they're below 562. These are like minutia. How about shorting Boeing? I'm already short Boeing. I sold a call at 240. Credit call spread. Let me check where the chart is. Okay, so be careful. It does look like a short with a stop. So these markets are not super smart. So they're going to treat this breakout from 189 like it's a 220 without looking left. So they're going to burst. If the market bounces this week because Powell says something that makes them feel better, and this one might go with it, it would be a better short on a burst. So if you're buying a put or a put spread, only take half. Credit call spread for today. Yes, I mentioned one, but it wasn't paying a lot. Let's see. 5665 pays 60. That's pretty close. So why? Why is it so cheap? So for Boeing, if you do want to short it, put time on the clock. So don't short it for the few days. And credit call spread, easier than buying a put. Credit call spread brings you money. Use the money to buy a put spread. That's the least amount of risk with a decent reward. You can't calculate the reward because in theory you're buying something without paying out of pocket. If you win with no cost basis. You're welcome. On YouTube, absolutely. Well, the one I took is for Boeing is for 240. So I said I don't want to mess around with it. I use different terms than mess around. I went out to December and I said, all right, I'll do it for December. 240. They're not paying a lot of premiums, so I don't want to fight the fight with it. For who? Do we have earnings for this week? Today we have AMD, SMCI, Rivian, Upstart, Arista. All important. Clover. Tomorrow morning, Uber, Disney, Novo Nordisk, Unity. Don't care about that. Tomorrow afternoon, AppLovin, Carvana, ARM, Axon, Oxy, Fortinet. And then Thursday morning, Peloton, Shopify, Conoco, The Trade Desk, Coinbase, Mercado, Cloudflare, DraftKings, Affirm. Wow, this is a big small caps week, folks. Dear Benzinga chat room software designers, please make the input box wider than one freaking line. For the 100th time. It's in the morning note, Maria. Click on it. You'll get it every day. Short GE. No, that's why I shorted Boeing. I couldn't find any GE good premiums to sell, so I went to Boeing. Thank you, Dave. So this is a broadening wedge, the mother of all breakouts. This will be a 245 if they want to justify it. Then I would sell calls, buy puts in size because this company is dying and everybody's defending it. No, it's reformed. Okay. Oh, that's a long day. Harbor Freight, new product alert. How many times are going to introduce it as a new product? Ooh, I do like those things though. The step drill bits. I don't have that. $43. What? Yeah. No. Delete. Harbor Freight, no commission. Can't stand that store. The people that work at my store are very rude. Yeah, but the stuff is great for a home gamer, which is what I am. Like, there's no way I'm going to break their impact driver. I use it like once in a blue moon. Like, my project this weekend was replacing the rollers on my garage door. The Hercules driver with the 3 batteries I have and the 2 chargers suited me just fine. So my son is a fabricator, right? So he needs serious tools. He goes there for a few things, a few throwaway things for specific reasons. But even his so-called good tools burn up. There's no foolproof tools like the Snap-ons and the Milwaukee. The Milwaukee physically caught fire in his hand. Which, by the way, is not American. I'm pretty sure it's a Chinese company, Milwaukee. The Snap-on broke in his hands a few times, cut him one time, so they came and replaced it. A pry bar, twice, and one of his levers bent. Mount Rushmore's close. Trophy. What do you call those? Pre-runner trucks. Here comes the highest point of volume on the ES. If you look at it on Thinkorswim, it is perfect. We had a spike yesterday, 5706, drop to 5607. Hey, 5706, 5607, and now we're in the middle. It doesn't get more perfect than this. Watch this. Watch. What is the word? Palindromic? Well balanced? Look at this. How cool is that? This base, this high, this low. Look at the base with the cluster of the volume right in the middle. It doesn't get better than this. I think these. Did I take out all the circles I did for that picture? Yeah. Yeah, I did. YouTube people, you can ask questions, by the way. Oops. What they're pricing out on the upside is so yesterday we rallied and today we dropped. They're pricing this. That's what's going on. This bounce is that price of this drop from yesterday, which is a descending wedge. Now, the question is if that does not hold and we come down and we make a lower low, folks, we're going down $5 more, 50 S&P points. That is not the forecast. That is something to watch out for. Signs, the circle, the blue circle. That's the first sign of weakness. A second sign of weakness, if you come down to the blue circle and cannot get out of 561. So that's what we're looking for on the downside. So these 1 minute, 30 seconds, and 15-second bearish harmonics that we're seeing here, these tiny ones, they better not take hold. In other words, they better continue buying the dips since this morning. So they better buy the next dip. We had one dip, rally higher high. They better buy the next dip to continue this. Otherwise, if they get to the circle, they might continue on this way. Looks like a Picasso drawing. Shh, copycat. Him, not me. Sir Nick. Hims, shorts at any level, long term. No. I bought the dip in Hims. It has an amazing P&L. My only fear for Hims is regulation. Are you able to put option volumes on that chart too? Options volume on this chart? Trading View? No. They don't have that. They don't have a dynamic way for me to get the feed from data from the options table. They have options data now, but I don't know how to put it on the chart. They can't. I don't think you can physically put it on the chart yet. You have to manually put it on the chart. If you export a table, copy paste it into your code every 20 minutes. You can update it that way, but that's just dumb. Conceivably, that's pretty complicated. Andrew, perk up your ears. I can have Excel live link update a Google Sheet, which then updates a table that can copy paste it into, or actually we can bypass the Google Sheet and copy paste it every 20 minutes. I find that very tedious. I don't think you can send webhooks into TradingView. You can send them out of. I wonder, can you set up? Ooh, Claude. Sell puts to buy Palantir at 80. Not for me. I will buy Palantir this year in the 50s. That's my statement. Palantir is way too expensive. They will come out and they will hate on it just as much as they love it right now. Love turns to hate. Just think about it. We're humans, right? We act in real life as we act with the stock market. Whenever there's a relationship that's super hot, they love these stocks. Once they turn on them, they hate them. They absolutely hate them. I'm dreaming. Wow, Ryan. Okay. You're on. You're dreaming to believe that 100 times sales is sustainable, my friend. There's not a stock that's leveled at 100 times sales. Go look. That fact alone should tell you it's too expensive. Look in the S&P. Find me another 100 times sales. 100 times sales. People are smoking crack that believe that this is actually sustainable. I didn't check the report, actually. Let me go check the report. Palantir. $39% increase in sales. Totally legit. Nowhere near what NVIDIA grows at, and NVIDIA is priced at 15 times sales. Yes, it wasn't as great as NVIDIA's. Okay? Not even up to its toes in greatness. And it's priced 5 times more expensive, even after this drop. It is astronomically expensive. It will come down into the 50s. And if not, I will be able to sell a put into the 50s to buy it at the 50 level via sold puts. Mark my words. The only way it avoids it is if it actually grows faster than this. The sales growth is dwarfed by the stock price growth. No push-ups. I'm doing weights these days. Let's see if they can come down to 559.50 and then bounce and make a higher high. My contention is that today is not like yesterday. I don't think the VIX is going to drop like yesterday because the VIX should have some sustainability into tomorrow. If we make a lower low, that's a big if on the day, I think we lose another $5 from the low. So we will go to 551, which is target 2 zone of my bearish harmonic that started Friday afternoon. I'm talking about Palantir. It needs to be cut in half before I'm interested in it. I don't overpay for stuff. I would rather not own it than double pay for it. Well, it's all about metrics, right? It's all about metrics. How much do you want to pay? If you love to own this car and you know the car is overpriced, would you buy it because you love it? I don't do that with stocks. Okay. I would do that with a laptop, which I did. I overpaid $500 on a laptop over retail because that was the only one available in the country. I did that, but I wouldn't do that as an investment. So there's no way I'm overpaying for a stock just because I missed it. That is mentality of chase. It does not hold well over the long term of investing careers. Okay, so you guys are convincing me to buy Palantir. I tell you what, you guys buy Palantir, and I'll be okay not owning it. And we'll see if I can buy it at half price than what you guys pay for it. And if I don't, hey, you were right. And let's see how much money you make from $90 Palantir or $100 Palantir over the next 5 years. It's totally okay for me to miss out on Palantir, is my point. I still believe in valuation. Wall Street still believes in valuation as an investment thesis. You and me don't move Palantir sustainably. It's the BlackRocks that do, not you and me. You and me are transactors. They are the mass buyers and sellers. A bear put spread. I closed mine today. You could buy it. Somebody called me chicken yesterday. I said, shots fired. I closed it today. A decent win. I know. Not me. It's very simple. I am okay missing out on an opportunity. I am not okay being made a fool of by buying the top. And this is a huge top for Palantir, mathematically speaking. If it doesn't increase its sales growth, how about I say it differently? The stock needs time for the sales growth to catch up with the stock price growth that it went on. Fair? The sales growth is fantastic. The stock price grew at a much, much faster rate. That needs to normalize. That is called the price to sales ratio. You can't break it. It is the laws of physics. That ratio is too large, larger than any other stock in the S&P. It is not the best company in the S&P. 1000% certain of that. I can name 15 better companies right off the top of my head than Palantir. The real bargains are at Harbor Freight, correct. So if you love Palantir here and you want to buy it here, why wouldn't you sell a put to the end of the year, lower than here, and get paid to buy it cheaper? What's wrong with that? Just stop these call buying, thinking that it's going to go to 150. I believe you said 150 yesterday. By when? Anybody that bought the 150 call is blown out today. Anybody that bought shares is not blown out. It's down a little bit. Stop buying calls chasing these monster rockets as not a momentum trader, as an investor. That is a terrible way of going long a stock. You want to buy a call, finance it by selling a put. I don't want anybody to sell their Palantir stock. I don't want anybody not to buy Palantir stock. I made a statement. I think I can get long Palantir in the 50s this year. You guys said, I'm dreaming. We shall see. I made that statement about AMD when it was in the 150s at 60. I said, I bet you, I made it on the Benzinga morning show before they fired me. I said, I bet you I'll have an entry point in the 60s. I got laughed at. It went to the 40s. And then I got long at 20 via sold put. All right, let's look at Palantir premiums for this year. If you twist my arm and you force me, you must own Palantir this year. I'll tell you, okay, I'll sell a $55 put and collect $250 in size. I wouldn't care about the upside. It can go to a zillion. You missed out. Yep, that's okay. I would have made my money on the downside. I did say that as well. Yes. High five, Vish. Thank you for pointing that out. I forgot that. Woo! Yes, no doubt. And Nvidia will go lower this year. What? Yes, the stock market has not bottomed, folks. I don't want to tell you hold puts. I want to tell you that don't hold calls. Hold shares, partial. Sell put spreads, sell puts to own shares. Don't hold calls. We don't know what we don't know. And I think my impression by talking to thousands of traders over the year, we're not even close to capitulation. And I've never seen a bottom without capitulation. Arguably, we are still in a breakout. Friday, when the market closed, we were 8% from an all-time high. And I actually got messages saying, is this the Trump you voted for who broke the stock market? And I'm thinking to myself, where is the broken stock market? We are 8 points from an all-time high. What are you talking about? The impression is that the stock market is broken, like we've corrected. We are 8 points from an all-time high, which means, I'm going to say it again, we haven't even started falling. Can I say it again? We have not even started falling. We just fell and bounced. Where is the correction? We just had a bad month. In fact, we didn't. We didn't. We closed with an incredible monthly green in April. Monthly candle. We had a bad March that set up a crash in April that they erased too fast. So where is the crash? I'm saying we haven't capitulated. People are not scared. The VIX is not, it's too high to be comfortable and not high enough to raise as much alarm as it should be raising. Which is why I say just have patience. Don't buy calls. Shares are better. If you're buying calls, sell calls against them. So turn it into a spread. Finance it by selling a put or a put spread. Balance it out. Buy your calls, but short the markets. So I said that, right? If somebody collected $100 for selling a credit call spread that expires today, it came under fire. You came at me, people, said, what are you doing with it? I said, nothing. I'm long shares. This balances out my portfolio. It's under pressure. Statistically, it's still okay-ish. I'll wait to see. Sure enough, today you can close it for nothing. So $100 per contract would have balanced out all your, like if you lost money on Palantir today, $100 of that would have been offset by your short credit call spread on the SPX. So we're so bullish that I cannot convince people to take a bearish position that balances their portfolio. That is a market that hasn't even started correcting in its mindset because we are under the impression that the Fed can save us. The Fed cannot save us. They only have a few tools, and the tools are ineffective when we have inflation. They cannot go buying bonds left and right. They cannot go cutting rates left and right. We will cause more cash to flow in the economy. We will exacerbate a situation of inflation. They might do it, but if they do it, that means they're desperate. That means we had something really, really bad happen, either a crash in the stock market, and yes, they will respond, or a crash in the real estate market. I don't know enough about it. A crash in demand on stuff, so GDP, etc. Metrics for consumer spending, which is a big part of the U.S. economy. And anyway, I'm not bearish by saying don't get in. I'm saying be picky. Read my morning note. Be picky. Being picky is not buying calls. Buying something sustainable. Shares, you can sit on a shelf. If you enter NVIDIA at 105 and then it falls to 80 and then it recovers, the shares are still shares. If you buy calls, they're dead. If you sell a put, it's not dead. You get assigned the shares you want at a lower price, just you take shares. It's as good as buying shares, or better, actually, to a large degree. So that's my message, and I get a lot of pushback on it. The fact that I get pushback on it should worry you all. That everybody is still one-sided. When everybody's one-sided, the blind side is there. The drop was mind-blowing in April. They're not talking about it enough. I think Laurel sent me something about it. I haven't opened it, but I think that explains it. The conversation needs to be louder. Something broke on that Wednesday, and we spent 15 days getting out of it. People got liquidated, and then that's the week when it was horrendous. And then the April 9th rally, 12% in one day. Whoa. Phew. Crazy stuff. Anyway, don't short Palantir, just temper your enthusiasm. Said the guy who shorted it yesterday. Few crash fears or upside chasing seen in options. Few crash fears or I don't know if I understand it. How do you understand this? Few. No. What? How would you guys understand the statement? Few crash fears or upside chasing seen in options. No commas, no nothing. What does that mean? I know, but what does that mean? This headline, how would you read that? I don't know what they're saying. There's not enough fearing of crashes and everybody's chasing upside. Okay. Wow. Talk about a badly worded sentence. Jesus. Yeah. So they're saying what I'm saying. Right. Yeah. So they're saying what I'm saying. Yeah. Anyway, my positions are bullish and they're making money, and the bearish positions are working out. Good balance on my portfolio. I sleep well. I put my head on the pillow, pass out. Today, I closed my longs in ARM. They report this week. I sold naked puts. They're more than 50% gainers, off the books. If it dips on earnings, I will resell the same put. Okay. Whew. YouTube. Aren't you glad you're here? Oh, thanks, Faye. What a treat, Hims. What a treat for the place. Okay. Hims, we're long. We bought the dip when it was falling into 25 and 23. There's nothing I would add to yet. If you're not member of the live room, consider. We have 250 people, even in the new format. I bet you we will still continue to have 180 to 220, even post Benzinga. Let's finish strong. You won't regret it. We do good work. Right now, we're not saying much because we're stalled. Yeah, AMD, I am short a put and short a call, so I'm okay with that. We will look at all the earnings later in the last 40 minutes of the day, 45 minutes, and see if we can come up with equally as strong earnings trades for tomorrow. On earnings, I like to sell things if possible. Yesterday, I broke my rule and I risked some money on Palantir, but not on purpose. Well, I purposefully stayed in the mistake. All right, the small caps are doing well. Comparative, like expectations, the way they opened and broke down, I thought they cannot recover, but they overcame the area where I thought there would be difficulties. So now they're stuck between the support from today, way above the lows of today, and the resistance from yesterday. It'll be interesting to see if the small caps can break out of 2013 RTY. 2013 is about $13. So 1.3 IWM, 198. So 199.4 IWM. Let's round it to 200. It'd be interesting to see if the IWM can get above 200. I think it's going to be tricky. All right. Let's see. What can we trade? Is there anything falling into a support zone? Like Palantir is not falling into a support zone. It's still too high. Something that is falling from earnings into a support zone. Do you see anything worthy? Not necessarily just today, this week. Like if it fell yesterday, let me know. Okay, Melissa. I will. So there was a change in Benzinga. I'm not leaving Benzinga yet, but the live room is no longer available to Benzinga. So if you want to be in the live room, which is what you're looking at right now, you cannot get into it from Benzinga. This is your only front door for it. Or, where do you live? Where do you live? Connecticut. We have a couple people from Connecticut here. I was going to say, we have 2 or 3 events coming up. Well, you can subscribe at Simple Stocks. It's pretty reasonable. But if you want to learn charts or options, I have 2 events coming up in the next couple of months. We have a trading event in Vegas in 2 weeks. Can you make it to Vegas? And if you sign up for the options class in July, you will get a front door until July, the end of July. This way, you get to meet us. It'll be 20 people in the class, 2 days. July would be in Florida, pretty close to you. You just go down, and you can get access to the Discord and the live room until the end of July, courtesy. Think about it. $1 million. Click on this link. There are 3 open classes. The first one is Vegas, the second one is LAX, which is charts. The third one, July, is options. Scroll down to the options class, click on it, you go there. Correct. Everything stays the same at Benzinga until they say, no, we don't want you there anymore. But for now, we came to terms that it's best that we don't leave the live room open because they needed some things to be said or not said and done or not done. Where do we hold it and all of that? So I said, well, here's how we can solve that. I didn't want this, but that's how it happened. Luckily, I'm still a contributor there, but not from the live room. It's a bummer to a lot of people because the live room is amazing. Benzinga has a lot of resources, so don't get me wrong, but I think this is the best one. Where can you get together with 250, 300 friends and trade successfully every day and have heated debates? Today, we debated the heck out of Palantir. Hopefully, I get something new from their opinions, and I'm open to their opinions, but I'm siding with the math, and hopefully that I showed the math to somebody who was a super fan that maybe now they're a little bit more realistic and say, okay, I still believe what I believe, but what if that guy is right? Because the math does support his claim. It's a matter of math. So this is how we can exchange ideas. I got schooled on a few things in the past, and I got told to go hunt a few pieces of information that got me to learning something new, like the fair value gap. I rekindled my interest in it, and it's one of my best tools right now. That happened about a year and a half ago, maybe. So it's a collaborative effort. I just happen to organize it. Why not have next training? Okay. Correct, LG. You are doing that because, as a courtesy, I haven't changed the password. But what if I change the password tomorrow? What are you going to do? Well, I'm not the man forever, so you're going to lose access as soon as I change the password. I figured there's some people that did not get the email. My milking it. Okay. How about if I give you a $10 discount? Would you do it? Jeez. No soup for you. We sold out. That's funny. How do you sign up? Ryan, I owe you an email, my friend. You just go to simplestocks.com. There's a join now. Click it. You get options monthly, quarterly, or a year. The year is a kick ass deal. I should have raised prices before I did this, but I didn't. I delayed the price raises. The price raises are coming, but not until you all transfer. 89 a month, which is a bargain because I looked around. Nobody spends 10 hours a day doing this. I know a lot did. So quarterly is like 230 something. Forget 236, which is also a decent deal. But the yearly is a slam dunk, no brainer. Right. So I know I spoke to Pam Pam. Some of you did not get it, but I have seen the emails. There were two versions. They're okay, worded okay, but they made it sound like it was a good thing. Like, okay. They said almost like, thank God that this is going on. Like, ooh, that was such a hassle having the live room. But anyway, sign up so you don't lose access. And if you ever have a problem, reach me here. Let's say I change the password tonight. The Benzinga people will be cut off completely. Jay, I had a SPY credit call spread, collected 46. I got relief this morning, closed it, half my position break even, and rolled up and out to July. Do you think the risk is too big to hold the remaining? Okay, so somebody had a credit call spread. They took advantage of this drop today to fix their problem. First of all, they cut it in half. Credit call spread is bearish, so he was under pressure. cut it in half, and then the second half, they made it even safer. You rolled it to July. That was panic. Well, in my hands, I would think it was okay. If I rolled it to July and now it's half the problem, I wouldn't do anything with it. So you were cautious, maybe a bit too cautious, but better than the opposite. Because I'm cheeking. Thomas, thank you. Every time I say it like that, I remember Disneyland, the boat ride, the Pirates of the Caribbean. There's one segment. Who remembers it? If you're going on the boat in the water, you go under a pirate city, and you've got a bunch of pirate people doing some weird stuff, and you have one lady going, "Don't be cheeking." It just popped into my head. Don't ask me why. Canceling. You can say whatever you want. You don't have to tell them why. Yeah. No, Sumio. You're a member already? Are you a member of us? I think so. It doesn't affect me any which way or another if you say. You can say it. Okay, what time is it? 9:11. We have big greens. These are unusual ticks right here. Somebody's saying something. Blah, blah, blah. Tariffs, no tariffs. Fentanyl, fentanyl. You found your room. All right. This is the place. What you don't see is, let me show you. People on YouTube. The private chat room going on. We have 260 people. This doesn't count the people that are on their phones that dialed in. So, short gold soon. You can, but be very gentle with that. You can sell a call spread. Maybe a debit put spread, but put time on the clock and half position only. Do you see how the headline comes out exactly where you need it? Didn't I say you need to come down? You need to hold the circle and see if you can hold it, number one. And if you lose it, then recover it. Okay. So now this breakout from 562 is so easy if this is a bullish day that it can get you $1.50 to $2 of upside. It should be like a no-brainer. No-brainer. But now we have $2 of downside pressure from the options. In other words, the price level at 562 is too high compared to what I see is going on in the options. All right. Now, whoa. Okay. For the first time in for freaking ever, we have a gigantic negative gamma number from TradyTix at 5610. 5610. $20 lower, which is $2 of downside pressure in the SPY. It is 1400. I haven't seen 1,000 number since the correction started in April. So let's see if it plays out today. If I have calls, I would book them into that yellow line. This looks like a breakout for 563.50 or 564. As we approach this yellow line, I would be out. Just in case. Because the options, the gamma, the gap, this is an ending spot, not a starting point. You can start a put with a stop. The put would be at 562. Right now, it is $100. Wow. Why so cheap? There's no way. Oh, wrong put. 563. 139. And put a stop. The stop should be based on dollar amounts. How so? If I buy a put or a call and I spend $1.50, I'll say to myself, I'm only willing to lose, and I choose a number 30, 40, 50, depends on your risk appetite. Everybody's different. And if I get there, I'm out, regardless of what the chart says. Canada headlines? What? We're worried about Canada now? Come on. We're like sisters and brothers, us in Canada. Come on, don't be like that. Scam likely. Bah. Trump button with Canada. Yeah, I hope so. Jay. I don't know which Jay is that. You need to sign up to simplestocks.com. Welcome back. All right, we're up $20, which is 14% on that put. $15 to $20. I'm not going to tell you when to exit. That's on you. Per contract. If this is new to you, you do one contract. Thank God for the options being cheap again. During the correction, the VIX was so high that even one contract was hundreds of dollars. So we're making $30 a contract. If you did 10, that's $300. I'm going by options data right now, not charts data. So if you're on YouTube and watching this, that's what we do all day. Usually we're a little bit more active. Yes, sir. Nikki Tony. Which is your name, Nikki or Tony? Did I see you come across? So you're going to sign up today? You would make my day. Going live on YouTube and getting somebody to find a room and signing up. Dominique. The man with 3 names. Okay, 30%, 32%, that's good. So I would exit my put here if I needed a win, and let me tell you why. We're falling into, quote, the neckline. 561.50 is a support zone down to 561.30. So the easy drop has happened. If I'm not in a put, I don't buy it here. I buy it if they come back up towards 562.5, towards the red line. I'm good, SM. How are you? You can hold a put because it says we should have $2 a downside. That's what I said from options. That's what Traditix says. I haven't seen a minus 1400 negative gamma all April. Dominique, sign up. You won't regret it. And if you do, you can cancel after the first. It just means that now we have data that's actionable again. And it may mean downside risk today. So, which is why I said I would book my calls at the yellow line before we got there. It's downside pressure. That's downside pressure. I'll give you a number. How about I give you a number? SPX 5610. Is what they think we need to go. And now it's $39, $29. So 3 SPY downside pressures. I see 2.5. So we're not going to split hairs there. You can see it on Discord if you're looking at the bars. The bars that, like, from where we are down to where there's a 0 bar. The QQQ about $2. The IWM is okay, maybe 50 cents, 70 cents. So it's mostly the mega caps. They filled the gap and then a bit more. Upper right-hand corner. But now they're at the problem from yesterday. Look at the top right-hand corner. We went from the highs of yesterday to the lows of this morning, about halfway right now. That's a natural place to rest. I told you the QQQ had a downside scenario, and I said only because they're trying to finish an upside scenario on a higher time frame that Tom mentioned before the market opened. So they got saved by the headline. Blah, 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 blah. Trump said, whatever. I'll keep my head down and I'll trade the charts. I think it's healthier. We're doing a good job without the headlines. I think we should focus on that. Thomas, thank you. Who just came in? Dominique! Yes! It worked. First time ever. Tangible results. Knuckles, I see you. So make sure your email is correct on the website. Make sure to, quote, verify your email with us. I send out emails in the morning and an email in the middle of the day most days. And in the email in the morning, there's a link to the live room and a password. And if you miss the email, like it doesn't come, goes to spam, you can log into the website and find the morning note. Click on the link. I love it. I love what he said. I found my room. What? I'm taking a picture. The little things in life. Where is it? I finally found my room. All right, we're up $120 per contract. 120. That is plenty. 84%. Don't be greedy. The downside, I said $2. We got almost $2. Did we? No, $1.80, maybe $2. Close enough. Now, I think there's pressure to lose the low of the day, but the circle is in the way. That blue circle, hard to explain. Trust me on that one. The blue circle zone is a contention. Now, if we lose the low of the day, which is two steps away, the downside from there over the next few hours can be $5. I wouldn't hold a put for that. If somebody took 10 contracts and they want to leave one as a true runner, you can do that. These days, you can see how the candles come out of nowhere. You know, somebody says something like the fentanyl candle the other day. We marked it. It was so ridiculous. It doesn't even have to be true. It can be anything. I had 5 puts, closed 4, and letting run with stop. Nice. High five, Eddie. Okay, so you had a tough time in the morning, you just recovered, and then some, and you're leaving a runner. That's how you trade the day. If you sold a credit call spread, Tom, you should have greens here, right? So the credit put spreads work, credit call spreads work, the earnings trades worked, the scalps are working. What? Pretty successful day. After a pretty successful day yesterday, and we had a great debate today. Pretty lively, but it was a great debate on valuation on a pretty popular stock, and it morphed into a conversation about overall fear in the market and expectations. And then somebody provided evidence that I didn't click on the information, I just took the message that supports what I'm saying almost verbatim, which is there's not enough fear, there's too much hope of upside, and not enough people are looking down. So the blind side still remains to the downside, and I don't think we even started falling. You can't hold a put for that, but what you can do is not buy calls. You can buy shares. You can sell a put. You can sell a put spread. You can buy a call spread, hopefully financed by selling put spread. So tactical trades, leaving room for error. You can't buy calls. Those are just the most hopeful way of trading, and tactically, they're pretty dangerous. Like if you twist my arm, say you have to buy the dip in Palantir, I would sell a put for the end of the year in the 50s and collect $300. That's the only way you can have me go long Palantir at this point. It's still way too expensive. All right. Circle or not? Drum roll. If you have questions on YouTube or in the live room, let me know. We've done well today with the education piece. In case you were here yesterday, I shared some trades. The earnings trades are all winners. Do not hold them. They're iron butterflies. Do not hold them. The Palantir trade, I made 40% or more at the open. With the bearish trade for the earnings, I got out of mine. I told you exactly why. If market doesn't move, maybe I see for when. We already did that, Yuri. What do you mean? When the market opened, you were here. I said, sell a put spread. When the market rallied, we said, Tom said, how about a credit call spread? I said, yeah, we just discussed it. So that's an iron condor, and it is 0 DTE, and it should be now at maximum gains. So gold, let's discuss. He's trading fast, momentum. I had somebody that reached out to me that is not in this room, and his wording was like, okay, so this gold thing, it seems like it doesn't want to stop. I'm thinking of going long. Like, whoa, all right, so you're not a momentum trader, so that's a definite no for you. Him. So make sure you're not like him and you're like Ryan if you're going long gold here. And the thesis that's going around, I think, is that the weak dollar should let the gold run. There is no correlation mathematically between that and that. It happens that way sometimes, but it's not something you can prove mathematically. So it's for as long as it's in the news that it's correct, and then it's gone. Yeah, if you close the credit put spread, you won for the day. I would not sell a credit call spread here. Somebody, I forgot who it was. They said they want to roll up. Was it Bonnie? She won with the credit put spread and wanted to sell a higher credit, roll it up. I said, make sure you sell a credit call spread with it. That's how we started looking at it. All right. Now the stall. Now what? We had a burst. We had a drop. And now we're somewhere in the middle of the middle. What do I mean? If I zoom out, we are in the middle of the drop. And we're in the middle of the middle. You see what I mean? Okay, let's put a line. High, low, middle, middle of the middle. So you don't want to do this. That is the extra $5 from the lows. So we could be in the low 550s. The reason why I don't think it's crazy is because yesterday and Friday, the targets, my targets were 558, 554.2, and 549.48. That would match up mathematically. We'll see. I'm not holding puts for it, but I was holding credit call spreads for it under pressure. Those played out. In case you missed it, I would close the 5-6 credit call spread, which is for today, that collected $95. Level 3 showing 20K buy at 560. Yeah, I think there are sellers above here. 5655 ES, there's a mountain of sellers. So I trump your level 3. We have Bookmap, which is a live everything. And on the S&P, There's a mountain of available transactors about $1 higher than here. So I'd be careful chasing up, but that's good information. So we got the $2 dip-ish, and we're stabilizing, which makes sense. We're now in better balance. Let me check my options. I still see another $1.50 based on my sheet. We are transacting. If I look at the QQQ, the highest transaction point and dollars is at 480, which is $2 lower than here. 480 for today. 150,000 contracts. The second closest one is 84. That's a big difference. That is a large difference, 45% more. There's not such a big difference on the call side. And the biggest call is 94,000 transactions. So that's a weird situation going on. Careful holding calls. Tomorrow, luckily, let me check the schedule if there's anything pre-open or not. Oil stuff. So I don't think there's anything before the open. But tomorrow it is Fed day. So we have to deal with that. But at least not as an open surprise. Okay, that was last week that I shared it. And it was for today's expiration, set up at 5720. Yep, but that's dead in our favor. We sold it. We sold it. We collected the money. I collected 75. You guys collected 95. Because by the time I finished talking, we had rallied a little bit more and you got more than me. And then it fell in our favor. The stock market fell in our favor. And then we had a super good rally on Friday. And it was under pressure. I believe the delta was like 35 or 6. And a couple people didn't bail on it, but rolled it. And I said, I'm doing nothing. I chose Tuesday on purpose. This was set up exactly for the disappointment before the Fed. And then it came to yesterday, it went green during the day and flat. And then at the end of the day, yesterday, it was down to $15. So I could have closed it yesterday, but then we opened down. So it went straight to zero. So $5 or $3 would have closed it. The S&P, the bummer about it, the SPX trades in 5-cent increments. Sometimes they close you for less than 5 cents, but you cannot put an order for less than 5 cents. The increments are 5. Okay. I think here's something I said this morning that I don't say often. Not enough people are looking at Berkshire stock. And I can probably make that whole argument about the market still being in danger because of the stock of Berkshire. So if we make the argument, follow the logic, that Buffett has put together a collection of the best companies in the US or in the world on the US market inside Berkshire Hathaway stock, if that's the argument, which I believe people can say with confidence, it made an all-time high on Friday. And it's now just a handful of ticks away from the all-time high, and people want to buy the dip in that stock. So the impression is that, whoa, okay, that was just weird that we're so weak, but we are not that weak. We just made an all-time high on Friday. And if it loses 503, which is the low from yesterday, it has one bounce from the April low. And if it loses that, that thing is going to have miles to go lower. So if you look at that one stock and say, okay, let's watch what happens with Berkshire, you can probably extrapolate what's going to happen in the market. I don't think I've ever said these words before. Let's watch Berkshire to see what the market wants to do. But I think we should. So I have it on one of my screens that you guys can't see. I think you should too. Where is it? 503. 502.80 was the low yesterday. BRK.B. Right now it's 512 and change. BRK.B. This candle, in hindsight, I could have warned you. This is one of those island candles. Out of nowhere, it gaps up, and within 2 or 3 ticks, loses the support. It goes down a mile, except it just gapped a mile down. So now they're saying, okay, we're going to buy it and go this way. Really? Okay, let's see. I'm short through sold calls and call spreads. I'm not closing them. And if it does run up against me, I'll add. Let's see. I have some shorts for 10 days from now at 545. Those are winners, 80% of max gains. That's the closest one in time, May, next week. And I should close those today. I have some for September. The delta on those is 33 on the sold leg, so it's aggressive. I have one for December. The delta on that is 8. And that is at 50% of maximum gains. Check this out. 22 days ago, when it was rallying, I sold aggressive. It was aggressive at the time. And now they're single digit deltas and they still pay $50 because it's $10 wide. I think I shared that one with you. 650 calls. So time to close the one for next week. So we're not fighting the short-term trade. Let's see if they'll give it to me cheap. If not, I'll leave it open one more day. It'll be cheap. Buy the close, sell the close, and then we'll see what happens. I just mentioned all of that, Maria. Hopefully you heard it. I'm just saying it doesn't deserve to make a new all-time high. I mentioned all of them. 545 for next week, 50 for September, 650 for December. Like there's somebody that would have paid you $500 22 days ago to give them shares at $650. And now it's 280. If somebody sold that call, if somebody bought that call, they lost half their money. They will still give you $300 today. Let's see if I sell it today. How much they will charge me. That would be interesting to see. I'll go to December and I'll go and try to sell that one call. In which account? This account. Whoa. Yeah, that's a lot of money. $5,000. They're all bulled up for one sold call at 650 for December, single digit delta. They want $5,000. That is unrealistic. I'm not going to do it. That's why I sold the call spread. That's probably why I did it as a spread for December. The problem with selling a call naked, they can change the required amount of money necessary to keep that trade open. So let's say I make $300. I would rather sell 3 $10 wide credit call spread and risk $3,000 or lock up $2,700 to make the same amount of money. Because even if it spikes really badly, my maximum locked up money is static. They can't change that on me. Hi, Shakar. Which trades do I recommend closing? I'm not closing any Berkshire trades. Oh, The one for next week. Because if Buffett, if Powell says something tomorrow that says, "Oh my gosh, yes, we have," I don't know. They seem to be babysitting the market, so I can't imagine. I think Powell is going to choose his words carefully, so not to upset the market. We can probably all agree on that point. He's going to tiptoe, walk on eggshells, so it's more likely he fuels. Um, no, I don't think it's more likely. It is possible he can fuel a burst higher that could get me in trouble short term. So, in order to avoid it, I would close the $10 that are left in that trade and reopen one or two extra positions in the other trades to get the money back if you're worried about that. Or roll it out and up. Like if you wanted to book your profits, but you wanted to stay short. So I can do close it for May 16th and say roll expirations. And I can roll it 1 week out. It's not that exciting. I can collect a credit of $20 after closing the one. So not that exciting. I can roll it down to a delta 12 and get $33. That could be doable. To a delta 14 and get $45. I could do that. But then I'll be short at 537 and a half. Maybe more drama. Okay, we're starting to get in danger here of finishing that scenario I'm talking about. Watch your longs. Watch your longs. What did you miss, Raul? Is this Raul C? We have a couple of Rauls. Yes. That second part is not necessary. Yes. Uh-oh. Yeah, very far away. And guess what? He's coming to LA. Wait, was it LA? Yes. Right? Yes. Coming to LA. So, all y'all that have excuses, we've got people from all over the globe. Even if you're a flat earther, you're coming from all over the globe. Oh, good question. I'm afraid to ask. Um, so this line that we're at 560, you can round it, is important because if you lose it on a closing basis, let me rephrase it. If you don't get back up to 561, you're probably going to test 558.50. You remember that squiggly thing from this morning? Might still be in play, is what I'm saying, in two steps. If you all want to put a label on it, it's called the head and shoulders. That's the measuring tool that tells us where they can go. Ryan, I see how you're playing the other side. Okay, fist bump. This morning was pretty funny. Pretty educational, though, for somebody that's watching both sides of the fence. It was great. Okay. Out of the put? Okay. There's a party in my house with the dogs are doing something they're probably not supposed to be doing. I'm not going to go check. Let them have at it. All right. So there's plenty of support here from the options if I'm looking at the S&P SPY. And we are in balance. We got down. Now I don't have any beef with the options constellation. Nothing. They're all in perfect balance. So if we fall, it's because of the charts, not because of upside or downside pressure. Everything is in balance. There's about $1 of magenta colored upside if you want to see if that works out on the SPY. So we could go to 561 or try to. If you don't see what I'm talking about with regards to the head and shoulders, I'll draw it out for you. One can say this is a neckline they're fighting for, and you can say 3 efforts, the middle one being the highest. If you lose it, to me, is if you don't get back to this spot, 561, then you're in danger of finishing the head and shoulders, which points to about 558.50. So I'll take that stuff off the screen. I just moved this guy from over there to over here. Ah, Patrick, I have a lifetime membership with you. Not with me. Oh, wait. I know this guy. Are you in here, Pat? I haven't seen you in a while. So the Head and Shoulders is unfolding. So last week I went on a jag of trying to not argue but correct people that say Head and Shoulders, let's go, or inverse cup and handle, let's go, or whatever. They're just measuring tools. Like if you see Head and Shoulders, don't buy a put. The Head and Shoulders just tell you where we can go if a certain line is breached. Yep. We have a bunch of good earnings this week. I mean, we have a lot of important earnings. ARM, SMCI, important for the XLK type of stocks. Like Nvidia reacted negatively to SMCI's pre-announcement last week. We thought it reported on Friday. I was like, what the heck is going on? It was a pre-announcement. I love it when a stock does that. I actually don't. Why do they do that? Can somebody tell me why? Oh, we got to pre-announce, it's so bad. Why? You catch everybody off guard. People get prepared for the earnings, and then you throw this wrench out before the earnings. Shopify did that one time. I think it was a mistake. He went on Kramer's show before the earnings, caused a 16% drop, which we went long into the earnings and won. But the CEO to go on Kramer before the earnings and say something like, "Oh, we got this one wrong, Jim." I think is exactly what he said. Something like, "Oh, Jim, we got this one wrong." The stock fell 16%. So why would they do that? Just cause grief. Why don't you do it during the time where you're scheduled to make an announcement so people protect themselves? Most people here, if they own shares, protect themselves into the earning. Like people who own a lot of shares of Apple, they tend to sell covered calls and buy puts for the earnings. So this morning I said that the trade is unfolding exactly the way it did yesterday. I said, but the ending of today was going to be different because most likely because the VIX yesterday spiked and then collapsed. I said today it will spike and it fell halfway. And I said, I don't think it can collapse because there's an event tomorrow. So far, that's proving correct. The VIX spiked, dropped halfway, and stopped. So far, we'll see. It's off the highs, but it's still not collapsing like yesterday. All right, please send me questions that are not minute to minute. I want trade ideas that are sustainable. I don't want No, just give me your trade idea. I don't care. Bullish, bearish. Let's discuss. Because then it's really a cross section of what you guys want, not what Nick's opinion is. Let's go. I would not take a long here. Linda, be careful. If you do, you should know that it's a quick scalp. Maybe you can do it. If you're using calls on the SPX and you're looking for $50 to $80. Okay. Oh my gosh. So funny. Please come to one of the events. Can you do that? Can you do that? How about LA? Vegas, come to Vegas next week. Let's go. Come on, you can justify it. Oh, what? You're going to make my day. Okay. Let's do this. One second. There it is. Forget work. You're sick those days. You're going to catch a cold. Tell them you're going to catch a cold next week. I'll write you a note. Oh, okay. So don't do a me. Don't pull a me. Like, I can't go. I have to work. Wait, you can work whenever you want to work. That's the point of working for yourself. I was recently made aware of said things. It's not on a weekend. That's the thing. It's a live trading. It's the live room live. Myself and Mert are going to run 2 days of live trading with the behind the scenes. Like, what do we do behind the scenes to get to here? We're going to share a lot of knowledge, and we're going to do one-on-ones to see, like, you do what you do, but I think there's so much more that you might be able to do other than these tedious, because you run your own business, you need to put some money passively to work for you. Like, similar trades, but less active. For those days where you disappear and you can't do anything, you can put the money to work with the same concepts on a higher time frames. Come on, do it. No pressure, but do it. $559 and change, 558.5, I think, would satisfy this Head and Shoulders. And I spoke about this little circle, the blue one. We've moved it around a few times, but about an hour ago, I said the battle is above it. The bulls want to stay above it. The bears want to go below and forbid the bulls from going back above. So keep your eye on that bubble and where price is. If price goes to 558.50, it's going to be difficult to get back above. And I want to also remind you of the less likely scenario, which is a lower low on the day. That would carry some devastating circumstances, devastating results for the bulls today. I don't see signs of it. Like 56.11, that's the SM. There we go, 56.10 SPX. Negative gamma played out. I told you, first day above 1,000. Pay attention. If you chase, immediately after I said that, this spike came. I said buy a put, which by the way is now $252 profitable. One of you, at least one, has a runner on. They had 5, they closed 4, they left 1. The 563 put. Anyway, all of this came in the face of all the other options data. So the chart says, oh, we're breaking out. And I said, wait, that yellow line is an exit spot for multiple reasons. If you look left, that's the easiest one to see. And options pointing down, close your calls. That was the easy no-brainer. And in fact, buy a put. We did that, played out. So now I'm saying everything I said above now resets to zero. And now the fight is between holding support, so not to have a pretty nasty day. Thanks, William, for the good word. I appreciate it. My goal is by the time this year ends, I would have met almost all of you in this room. We already know a lot of you on a personal basis. Like when Larry talks, now I know what Larry looks like. Just to use one person. And you're definitely a personality. I kind of know what Ryan looks like, even though maybe Ryan will show up. What city do you live in, Ryan? I can't remember. Michigan? No. Chicago, of course. Dang it, you missed the Chicago event. I don't think we're going to Chicago again. It's too expensive. But maybe one day you can meet us in one of those cities. Capital Larry, yes. You didn't meet him? Let me tell you about Larry. When he signed up to Orlando, there's a picture out there. Me, also, I think other people, I don't want to name names, Larry, and a pink Speedo. Almost. And a pink Speedo. And it wasn't me wearing the Speedo. Larry's a beast. Shredded. Not Ragu, Larry. Definitely not Ragu. Ragu, there's a request for you to wear a pink Speedo. Are you willing to comply? No pressure. Oh my God. I got a parking ticket yesterday. First time in 20 years, right in front of my house, blocking a fire hydrant. Never happened to me before. It's okay. So today I'm going to park a diesel truck in front of my neighbor's house, just in case he called them on me. A ladybug. That's an inverse cup and handle. No, in front of, yeah, on the side of my house, there is a fire hydrant. I didn't block it. You can access it from the other side of the corner, but so the hydrant is on the corner. So I blocked one side. The other side is open, right? And you can't block the other side. There's a walkway. So it's technically blocking a hydrant. But somebody must have called. I mean, why would they now, after 20 years, show up? I always park there. No water in it anyway. Oh, zing. I don't live in LA. Ouch. No, my town has a lot of water. Too much water. Ooh. Yeah. So I'll just take a diesel truck and park it in front of his door for about a week and see how he likes it. No, he's not worth it. Hey, that's a good theory. Gas is too expensive, less cars on the road. No. Plenty of cars on the road in this area, Mike. You know it. You live in Northern California. Think 880 and 580 during traffic, high traffic. That's how it is always up in the LA area on the freeways. I don't know if you've ever driven down 680, 880, 580 in your area during commute hours. Oh, and double the size of the freeway. Like 10 lanes on each side. Some spots. They're getting better though. From Emeryville to Petaluma. Wait, Petaluma. So she crosses over also? Is Petaluma on the left side? So you go up the freeway and then left? I'm trying to picture it. Yikes. Oh my god. Yeah, that would be a nightmare. Right. So up and left. Yee. So that bridge is one or two lanes. So on the pileup days, is it closed or is it just choked? Oh, okay. All right. So up middle of the screen. This is a collection of all of the ETFs that you see here. You cannot afford to make a lower low. It's the same story here. Right. Because that opens a trap door, which will finish that conversation that I had, the low 550s, which started Friday. This was the visual of why we don't go long here. 5.6, 5.5. We went as high as 5.6, 6.9, 6.8. Let's say 70. So we went up to here and stopped. They overshot. All right, folks. On YouTube, we're going to cut it off. Thank you for your support. Thank you, Dominique, for joining. I'll see you in the live room tomorrow if you're not here already. Lower low, you mean 30 points lower? No, I didn't say that's where we're going. I said I have support from options. I don't need it to go there. But I said if for whatever reason we finish this head and shoulder target, which is 558.50, we are too close to the lows of the day. If they trigger lower, we could open a $5 trap door. I think that would be a good opportunity to trap some bears. Follow the logic. Let's say for the next hour, they go, oh my gosh, I'm limping, and they follow this red thing. And then they get here and they go, boop, beam. That's how they'll take everybody's money. The bulls in the morning and the bears in the afternoon. I favor this path, if at all. So go long on a scary moment to see if you can be a market maker. I don't think we need to fall. I think if the bell rings right now, it's a perfect constellation of options. 5610 is where they want to be on the SPX. But there's a lot of time to kill. I don't think we can stay there. I appreciate you. Thank you. So if you don't subscribe to the YouTube channel, it's youtube.com/simple stocks. Hit subscribe, not you guys in the live, YouTube people, and set the bell. So if I ever go live again, you will get notified. And spend a couple of bucks, join the live room for a month, and I bet you will never leave. And then you will cancel your monthly and subscribe for a full year because it's even cheaper than that. All right, YouTube, I'll see you later.